Hi, I'm John Persinos, editorial director of Investing Daily. With me today is my colleague, Catherine Beam. She's the new editorial director of our subsidiary, Street Authority. Kat takes over from Brad Briggs, who did a very capable job for many years and recently decided to move on to other challenges. Street Authority is in good hands with Kat. Kat asked to interview me about my outlook for the financial markets in 2024. I'm always happy to sit down and chat with Kat. She and I go way back. Kat, greetings.
Always good to see you, John.
Always good to see you. Well, look, let's get started. What's your first question?
Sure. John, I've been wondering, are you bullish about stocks in 2024? And if so, why?
Generally speaking, I am. A major reason is that the Federal Reserve is coming to an end of its tightening cycle. The Fed has raised its benchmark rate 11 times so far in its campaign to curb inflation. The Fed funds rate currently hovers at about 5.33%, which is a 22-year high. The central bank has embarked on the most aggressive policy moves since the early 1980s. Current market expectations for the path of the Fed funds rate, according to scheduled Federal Open Market Committee FOMC meetings, is for a series of pauses and then a 0.25% cut in May 2024 to 5% to 5.25%. Liquidity, well, it's the lifeblood of markets. History shows that when the Fed finally pivots on rates, equities soar in response. The 10-year U.S. Treasury yield has dipped below 4.2%, reaching a level not observed since September. The significant decline of this benchmark bond yield has been manna from heaven for the stock market. As yields fall, stocks tend to rise.
What about the economic backdrop is so encouraging to you, John?
Well, look, economic growth is decelerating, but it remains on track, a so called Goldilocks scenario that the Fed likes to see. Despite robust U.S. gross domestic product growth, signs of weaker household consumption and a decelerating labor market are emerging. However, this slowdown is gradual, aligning with the Fed's dual mandate to combat inflation without tipping the economy into recession. Picture it as a smooth transition to a slower lane instead of a sudden swerve into a ditch. To be sure, tech stocks have been on a tear, but stock market leadership has expanded beyond the usual suspects. The rally has included shares across most sectors, not just a handful of mega cap tech names. Small cap and cyclical stocks are taking the stage, suggesting economic and stock market vibrancy as we head into 2024.
John, I'm wondering which sectors look the most promising to you in 2024.
For the underdogs in the market, including bond proxies, small caps, and value style investments, there's an opportunity to catch up next year as the headwind of rising yields subsides. As I've just explained, a major factor driving stock market gains during the last 2 months of 2023 has been the collective feeling on Wall Street that we've witnessed peak interest rates, which means that I particularly like interest rate sensitive sectors for 2024, especially utilities and real estate investment trusts, REITs. As they position their portfolio for next year, investors should consider utility stocks, REITs, and other sectors that have been laggards because they're poised to become leaders. Utilities and REITs got clobbered in 2023, but they're poised to rebound when the Fed pivots in 2024. That means value plays are ready for the picking.
How about small cap stocks in 2024?
I'm glad you asked. Accelerating economic growth is likely to provide a catalyst for small cap outperformance next year. Historically, small cap stocks have demonstrated a heightened sensitivity to economic conditions, flourishing during periods of expansion. Smaller companies, often nimble and innovative, are better positioned to capitalize on new opportunities that arise with economic growth. Unlike their larger counterparts, small caps can swiftly adapt to changing market dynamics, allowing them to leverage emerging trends. This adaptability not only positions them favorably in a recovering economy, but also enhances their growth potential. Another factor bolstering the case for small cap outperformance in 2024 is the high probability of a Federal Reserve interest rate cut. Looser monetary policy stimulates economic activity, making it easier for businesses, particularly smaller ones, to access capital and fuel expansion. But bull markets don't move in a linear fashion. We're likely to see dips along the way, depending on geopolitical turmoil or any economic disappointments. As we stand on the cusp of a new year, investors should adopt a balanced equity allocation, leveraging sector setbacks as opportunities to diversify across underperforming asset classes.
Now, John, I know that you're an expert on the aerospace/defense sector. Do you recommend military contractor stocks for 2024?
Indeed, I do. Global defense spending in 2023 reached a jaw dropping $2.2 trillion, dollars, the highest level in inflation adjusted dollars since the end of the Cold War in 1991, according to the latest data from the Stockholm Research Peace Institute, which compiles a tally every year. As of last year, the US shipped 45% of the world's weapons exports, roughly 5 times more than any other nation. So if any politician tries to tell you that the US military is starved for funds, don't believe them. That's demagoguery. The Pentagon doesn't have to rattle a tin cup for funding. The Israel, Hamas, and Russia Ukraine wars and worsening antagonism among the US, Russia, and China have fueled a push in Washington to boost Pentagon funding even further. Therein lays an investment megatrend for 2024 and beyond. Hopefully, one day humankind will beat its swords into plowshares, but that day doesn't seem to be on the horizon. Orders now pouring into the coffers of US based aerospace defense contractors will generate lucrative work for years, posing a bonanza for investors with exposure to this sector.
Now, another trend, artificial intelligence or AI, is all the rage these days. Is the bloom off the rose, or will AI continue to provide bullish impetus for stocks, do you think?
AI mania, it did slow in October, but it's back again. And I think the momentum will carry into 2024 and beyond. In system theory, AI is what's known as a singularity, whereby a small change can cause a huge exponential effect. A singularity also implies changes that are uncontrollable and irreversible, spawning unforeseeable changes and perhaps an existential threat to human civilization. The outperformance of the technology sector year to date has been driven by AI, a dynamic that has in turn boosted the broader indices. The size of the global AI market was valued at $136.55 billion in 2022, and it's projected to expand at a compound annual growth rate of 37.3% from 2023 to 2030, according to Grand View Research. The global market for AI and asset management was worth 2.6 billion in 2022 and is projected to expand at a compound annual growth rate of 24.5% from 2023 to 2030, according to a new and separate report from Grandview Research. The report states asset and wealth management firms are exploring potential artificial intelligence-based solutions to improve their investment decisions and extract insights out of their historical data. What's more, a recent survey by market makers has found that 9 out of 10 hedge fund traders will use AI in 2023 to achieve alpha. It's clear that AI isn't just a fad, it's revolutionizing our daily lives and the investment world. The key is to find smaller pure plays in AI that are flying under the radar. The mega cap tech behemoths, they're heavily invested in the technology, but they're already pricey.
How about any other areas in tech that you like for 2024, John?
Well, fueling the tech sector's prosperity is continual innovation, not just in work at home digital capabilities, but also in renewable energy, health services, virtual augmented reality, robotics, artificial intelligence, autonomous vehicles, orbital satellites, fifth generation 5G wireless, the Internet of Things. It's a brave new world out there. These animal spirits in the tech sector will lift the broader stock market in 2024. Now's the time to get into position.
Thanks so much for your insightful answers, John, and thanks for your time.
Always a pleasure, Kat. Thank you. As you position your portfolio for next year, turn to utility stocks. The utility sector, it got clobbered by rising interest rates in 2023, but it's poised to rebound when the Fed pivots in 2024. That means value plays are ready for the picking. However, you need to pick the right ones. For our list of the highest quality utility stocks, click the URL at the bottom of the article that accompanies this video on the Investing Daily website. Well, that's it for now. Thanks so much for watching.